have only one person. Please let's use the if you can hear me. Let me say hi before the having the Joe. You are still the only one on. I don't know why joining. It seems a range break is back. Okay. So today's topic will be on chart patterns. So we're going to start from okay, let me first give you the patterns which we'll be treating today. We have the head and shoulders, head and shoulders. We have the inverted head and shoulders. We have the double top, sorry. You can jot it down. I'm not having a good writing on the screen. We have the double bottom, the double top, which is also called the double bottom is called the W pattern, the double top is called the M pattern. Which other pattern are we going to be talking about? Okay, let's talk mainly on those two patterns first. So the head and shoulders pattern is a reversal pattern. It is a reversal pattern. What do I mean by reversal? For example, a trend has been on an uptrend and suddenly it changes back to a downtrend. That's a reversal. So head and shoulders always occur on the top of a uptrend, and that gives you, that pattern itself gives you a signal for a sell. It gives you a signal for a sell. So this is how you can cite a head and shoulder. If a trend is moving up, it moves up, retraces back a little, moves up, retrace. Let me restart it. Moves up, retrace back, moves up, retrace, moves up. Then you can see that the lows, it creates some support levels as it is moving up. Those support levels, the new supports are higher than the previous one. You can see this new one is higher than this previous one. So whenever you have something like this, whenever you have something like this whereby the market comes down again to the to this last support, to the previous support, know that head and shoulders is likely to form. So two things are likely to occur here: either breakout or bounce. So if there is a breakout here, that's not head and shoulders. That means the market is not forming head and shoulders. But if there is a bounce here like this, that means a head and shoulder is likely to form. So two things is likely to occur here. You can see there is a resistance here. So two things is likely to occur here. It's either this market breaks this resistance and continue the uptrend, or it bounces here again. So that's not all. That's not all. It's until this market breaks this level, this support, that's when the head and shoulders has fully formed. So let me draw that again. So it's usually like this. So this is the this support is usually called the neckline. That's the neckline, and these two resistance, this and this, is the shoulders. This is the left shoulder, this is the left shoulder, this is the right shoulder, this is the neckline, and this is the head. Here is the head. That's the head. Do you understand? So we now have it as shoulder, head, shoulder. So if I tell you that the market formed SHS, I mean head and shoulders, shoulder, S, shoulder. So now, how to trade this pattern? We have three different ways how to trade this pattern. We have the aggressive way, and we have the less aggressive way, we have the conservative way. Again, the aggressive, the less aggressive, and the conservative. Now the aggressive enters immediately there is a bounce on the resistance, on this resistance. Immediately this market comes down to test this previous support and bounces up and respects this shoulder, this resistance, and bounced back. Then the trader enters for a sell here. That's the aggressive. The less aggressive waits until it breaks this neckline. Then it's the less aggressive enters immediately after this breakout. It is still the same thing, but not the same. You can see this person entered at, let's say, person entering here with 20.07. Conservative, conservative for a retest and also a bounce. So conservative have waited to come down here, then come back, retest, bounce, then the will, and maybe TP somewhere around this level. So that's the head. These are the three to trade a head and the conservative traders usually get profitable, the most profitable trades, or the most accurate trades, because the aggressive trader, after entering here, it might sell up to this level, up to this support, and bounce again on this support. So that means the head and shoulders has failed. So if it comes down here again and bounce, that is automatically giving you a buy signal. So if this market fakes out, so there will be a trend line joining these two resistances, this resistance and this resistance. So once immediately there is a bounce again on this level, what you need to do is just draw this trend line like this. So immediately this market breaks this trend line, you can enter for a buy as what, as aggressive traders. But as conservative trader, you might wait for a retest and bounce, then you enter here. That means the head and shoulders has failed. It's not all the time you see a head and shoulder that the head and shoulders are validated. They are being invalidated sometimes. So let's check the charts. This is 1 minute time frame. Let's go to a better time frame. Let's go to M15 and let's look for head and shoulder. This is a good one. Yeah, there are three types of head and shoulders. Let me quickly draw it. This is first type. Sorry, this is the first type. Excuse me, I'm not really good at drawing. The first type is the neckline are on the same level, the shoulders are on the same level. The second one is this. You can see that the neckline and the shoulders are not on the same level. You will join it together with a trend line. You will have to join it together with a trend line. That's the second one, and here is the third one. So this one is coming down. You can see that it's not on the same level. You also have to use trend line to join it. So you can see this is the type we have here. Hope you see that. So now what you need to do here is join it together with a, let's return here. So just join it together, join the neckline together. Okay, so as aggressive traders, what do you do here? You sell here, right, and place your stop loss above this level as aggressive trader. So let me put a level there on that entry, because there was a bounce. Because there was a bounce here, then you enter here, right? So, and as less aggressive, you are entering immediately after the breakout of this neckline, right? The markets right now, you can see that the market retested that line and bounced. So what do you do? What do you do as aggressive trader that has entered here? The next thing you need to do is just place a stop loss above, right below your entry here, so that if the market later breaks out again here, you would have been out of the market and you won't be able to close that trading loss. So let's see what will happen. Okay, so the market later broke out. So the aggressive trader here is still in profit. Now the less aggressive can now enter here. So let me place a level there also for the less aggressive. Sometimes there are some people that do enter multiple positions after entering here, after entering at the first level, which is for the aggressive traders here. After seeing that breakout, they enter another position, they add another one, and if there is a break and retest, they enter another one again. So let me continue that level. So do you see that? You can see that the line, the market came up again to retest this neckline and it's bounced, then they enter another position here. So this pattern can be used for long-term trades, not scalping. You can, if you want to use head and shoulders to scalp, that means you'll be using 1 minute time frame and not 15 minutes. So this is our third position, which is the conservative traders. So now let's look for our possible exits. We already have 3 positions, 1 2 3. So let's use this one for let's use this support for our exit. We'll be exiting on this support. So let's see if the market got to that support. Okay, so you can see what happened. Okay, the retest even bounced on this support, the one that came up to retest. So according to the head and shoulders strategy, this is it. After a breakout, it comes back to retest, then comes down. It usually breaks this support. At least you will have three eyes. I mean, yeah, 3 eyes like this higher eye, lower eye, and another lower eye. So if you have entered here, you will be taking your profits somewhere around this level. So let's look for another support. So let's use this support. Okay, so here is our TP. That's the support I've drawn. So you can see now that the market was able to break this level. So let me draw out that pattern. Sorry, this is the first shoulder, which is the left shoulder. That's the head. This is the second shoulder. This is the breakout. This is the retest of the neckline, and you can see that it later broke this level. Do you understand? And after that, what happened? The market went up again. So that's that about head and shoulders. Pop Joe, are you still online? If you are still online, let me know. Say yes if you can still hear me clearly. So now to inverse head and shoulders. Inverted head and shoulders. Inverted head and shoulders is the same thing with head and shoulders, but the only difference is that you find head and shoulders on top of a bullish market, while you find inverse head and shoulders below a bearish market. So head and shoulders leads a market from a buy down to a sell, while inverse head and shoulders leads a market from a sell back to a buy. So for example, this is a good example of inverse head and shoulder here, and it is respecting. Okay, now you can see the market was coming down. The market was coming down from here. There was a pullback, came down again, then went up again to test this to test this support, but that support wasn't. So let me, because this was the first head and shoulder, let me do it again. The movement here, up again, downward, up, back, then up. So we are still going to use trend line to join these ones also. Popjo, if you can hear me, say hello or say yes. Obviously you are the only one online, you are the only one listening to me. Okay. 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 Let me continue. I was testing if I was still online. Okay, now, so what am I doing? Inverse head and shoulder, or inverted head and shoulders, whatever English you call it. So let me redraw this movement. Okay, Mr. Popjo, thank you very much. So do you see that inverted head and shoulder? So it's not on the same level also. It's like this one, this head and shoulder that we drew, we used a trend line. So now, where's our entry? As for aggressive traders, you enter here right after this bounce. So let me place a level at that point. So as for less aggressive, you enter at this breakout here. So let me place another level there. Now see what binary did here. I have a video where that shows almost everything market makers do, how they manipulate. This is one of the things they do. After forming a good pattern for a movement, they now make the market reverse in such a way that it will at least hit as so many stop loss as possible. So see this kind of reversal here. You can see this market after breaking out this level, though we know it seems it's respected this resistance, right? But if at all it will respect this resistance, it shouldn't be up to this level. See what happened there. That's a pure manipulation. That's a pure manipulation. So sometimes I don't usually use stop loss if I use very small lot size. I use stop loss only when I use big lot size. So in this kind of trade, I only start using stop loss when the market has fully taken shape. But at this zone, there are still manipulations. This movement was very okay. There was no manipulation here. There was no manipulation, but this is a very huge manipulation. If at all this market should have retraced, it shouldn't up to this. It shouldn't be up to this. It should have been something like this, maybe come back and retest this level which it has broken and bounce off here. But see, it broke it down and broke it up again. So that's a very bad manipulation there by binary.com. May God help us. So let's continue. So the first entry by the aggressive trader here, the less aggressive, let's say here, it would have entered after this first candle have closed above that line, this candle. So it would have entered here. So what about the less aggressive? Sorry, the conservative. The conservative should have entered after this if there was a bounce here. But see what happened here now. They have totally erased the conservative traders out of this market, because they won't be able to enter for a sell here. They would have been waiting for a retest and bounce here for a sell, and see here it broke out to a buy again. Then they would have been waiting for a retest and bounce. So up to this level, there was no entry for them again. So there is no entry for conservative traders here, only the aggressive and the less aggressive. So let's see where we can take our profit. So let's take our profit on this resistance, over here. So let's see if it's okay. So that's a successful one. So that's about head and shoulders and inverse head and shoulders. So let's move to double top and double bottom. Double top is also a reversal pattern, or we call it M. So double top is, when you see double top, you look for opportunity to sell. That means the market has been going up, and after a double top, then it is giving you a signal that the market want to change to a selling trend. While double bottom is like this, the market has been selling and it is giving you signal that it want to start buying. So this is how you trade your double tops and bottoms. You have we have two types of entries for double top and double bottoms: the conservative and also the aggressive. So let me draw the pattern. So here is the double top over here. So there are some double tops whereby it respects the same resistance, the same level, but there are some that doesn't get to that level before returning, something like this. And there are some that will break that level, something like this, and still come back. It's still double top also. It is still double top. The main thing to look out for is when it breaks the neckline. This is the neckline over here. This support is the neckline. So now see, whenever you see something like this and you see that the market is coming back from here after forming two tops, one, two, after forming two tops, what you need to do is just wait for the market to break this support, which is called neckline. So as for the aggressive traders, you enter immediately after this breakout, and for the conservative, you wait for a retest and bounce, then you enter here, then you TP some, maybe somewhere around here, you TP here. And for the, it's the same thing for inverse, I mean for double bottom, same thing. So after this, after the break of this neckline over here, you enter as aggressive traders. For conservative, you wait for a retest and bounce, you enter here. Do you understand? So let's look for, okay, this was a double top, this was a double top, but you see what happened, the neckline was not broken, it's returned. So sorry about that. So let's look for another double top. Okay, this is a double top here, this is a good double top here. Sorry, I'm trying to bring this. Okay, so this is the first top, this is the second top. So the market was an uptrend, came down below, went up again and still respected this level, then came down. So what we need to do now is wait for the breakout of this neckline. So once this market breaks this neckline, as aggressive traders, you enter here, you can take your profit somewhere around this level. So let me put, so you are taking your profits on this support, on this support. So let's see. Okay, now the market has broken the level, so let's place our entry here, as for aggressive. So conservative trading, you know, you need to wait for a retest and bounce, right? Okay, thank God the market retested. You can see it's retested here and bounced. So immediately after seeing this rejection candle over here pointing down, you should have sold. So the conservative traders would have entered around this level also. The same tip, we are both taking your profits on this support. So let's see how the markets will move. Nice one, nice one. So you can see the movement of the market. So that's double top. Let's check for double bottom. See another double top here. You can see that this is the second type which I drawn for you the other time. You can see it is the second top was not touching the first top, the first level of the first top, at the level of the first top rather. So, and you can see it broke out the neckline here. You enter here as a what, as a as an aggressive trader. Conservative, you wait for a retest and bounce, then conservative enters here. So let's say assume both traders entered at this level, and so let's look for it nearest TP. Let's TP here. Taking profit on this support. Wow, see that failure. So if whenever you enter trades like this, your stop loss should be above this neckline, so automatically this one hits our stop loss. That's another manipulation from binary. When market has formed double top, broken the neckline, retested and bounced, the market still went up. So those are part of the manipulations we see here on binary. May God help us. So let's look for double bottom. Let's look for the double bottom. Okay, this is a good double bottom here. This is a good one. You can see after breaking the neckline, if you entered here for a buy, take your profit here. Let me draw the levels. This is the neckline. Take your profit here and you enter here after the breakout. So for conservative traders, there was no entry for you because the market didn't come back to retest and bounce. So that's a double bottom, and this is the second type of the double bottom. You can see that this second support did not get to the level of the first support. So let me see if I can get another one. This is the third type of the double bottom. You can see the second bottom broke the level of the first bottom and came back. They now broke the neckline over here. The neckline was broken here. So you can enter here and take your profits here. Trying to see if I can. Okay, here's another one. The neckline was broken here. And thank God for this break and retest and bounce. So here aggressive traders enters here, conservative traders enters here. And let's see our possible TP level. Okay, let's TP here at this level. Wow, this one failed. So the market got to this level, and so as the market has gone up to this level, you should have logged your profits around this level. So this shouldn't have come down to hit your stop loss and close your trade in loss again. So that's that about double bottom. Okay, I explained something to you the other time about head and shoulders. When head and shoulder fails. Okay, this is a double. This looks like a head and shoulder, but can we regard this as a head and shoulder? Okay, so this market broke this level and came back up again and broke out. So this pattern is somehow okay. If you look at it, there was a double top here also, and the neckline was broken, and this is a manipulation. That pattern is somehow. Thank you, Mr. Pop Joe. um I should explain divergence also, but I already have a video on divergence, so I've sent the videos to the group already, so you can watch it again. And how to catch spikes, let's check. um, let's check crash 500. How to catch spikes. If you want to catch spike on crash 500, the best thing, the zones where I catch spikes easily is when the market is consolidating like this, it's not on strong trend, or when the market is on downtrend like this. It is easier to catch spikes. And for boom, when the market is consolidating and when it is on uptrend, boom spikes up, right? So this, for example, let me put, okay, so let's come to this zone now on M1. If you want to catch spikes, you use 1 minute time frame. But first of all, check maybe like 15 minutes and see what is happening. So if it's on a strong downtrend for crash, you are good to go. And if it's on a consolidation, if the market is doing zigzag like this, you are also good to go. So let's say M1. This thing doesn't load on M1. Okay, let's look for, okay, this is obviously a consolidating market. It was consolidating. Now the tools you need to use, you use your RSI. Let me bring out my RSI. Okay, this was a consolidating market also around here, and also on a downtrend. You can see that it's on a downtrend, so it is easier to catch spikes here. So the downtrend has been confirmed from here, from this level. So let's start catching spikes here. So what do? Number one, draw trend lines. Draw trend line, join the higher highs together, the highs. So I joined this to this, and I would have cut this spike and cut this one also, so making two spikes. Let me continue it downward. And once you notice something like this, that the market is now touching your trend line again, you draw another trend line to join the previous one and the current one, something like this. Make sure this first one is still going also. So now you can see that another level has been formed. So what do you do again? You draw another one. Now see what happened here. You would have entered for a spike here, right? But the market broke out with how many candles? With 3 candles. Now the stop loss I usually use when catching spike is 5 candles. If I draw a line and enter for a spike and it didn't spike after 5 candles, after breaking it out for 5 candles, I close. But if it's not up to 5 candles, it might still spike. You can see that this broke out only 3 candles and spiked on the fourth candle, so you would have caught this spike. Do you understand? So this one that is coming here, let's see if you can see on spike with it. Okay, see what happened here. It would have entered at this level. It only broke with 2 candles, so you would have caught this little spike. Or maybe if you waited for all this to happen, you would have caught this bigger one. So let's continue with this. Hope you understand how I'm drawing those trend lines. Make sure you continue the trend line until the trend has totally changed back to an uptrend. Okay, so see this higher trend line. So see what happened here. You can see it respected the line here, but broke it here and broke it again. And so once you notice something like this, you come back to your RSI. Once you notice on once you notice instability on the main chart like this, and you see that the spikes are just occurring on some levels where you don't even expect it, on an unexpected level, so just come back to your RSI and draw trend lines and support and resistances on your RSI. Draw the higher high, the highest level on the RSI. So whenever the market touches the highest level, you sell for crash, and if it's for boom, you draw the lower low. Boom spikes up, so whenever it touches the lower level, you buy. So see, since the market started blah 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 from here, let's assume you've drawn it from here, so you would have caught this spike, this one over here. Let's see another one. You would have caught this one also. You would have caught this one also. Let's see if you can still catch more. You would have caught this one also. So do you understand? Also, you can draw trend lines. You can also draw trend lines, either ascending trend lines or descending. See this ascending. So if you have drawn these 2 levels together, these 2 levels, one, 2, I drew these 2 levels together and use it to catch this one. So you can see, if it was on the main chart, you wouldn't have caught this spike because it wasn't on any level. Okay, it was on this level, but it is not touching it yet. It was not touching that level yet before the spike occurred. You can see that it has not touched it, and all the trend lines and it has broken the highest trend line that was coming from the uptrend, from the up. So you wouldn't have expected any spike here, but with the help of RSI, you would have caught that spike. So those are the 2 major tools I use to catch spike: trend lines, support and resistance. Then 2 things to look out for in the market when catching spikes on crash: make sure it's on a downtrend or on a zigzag mode. Likewise, when catching spikes on boom 500 or boom 1000, make sure you trade it when it's spiking up, when it's on a uptrend, or when it is on a zigzag mode. Don't try catching spikes when it is on a downtrend, and don't try catching spikes on crash when it's on an uptrend. You rather look for opportunities to join the buy. So thank you very much for tonight's webinar. So if you have any other questions, you can drop it on the main group. So if it requires me to do a short video for it, I will. So before we close for today, Mr. Pop, obviously only one in class today. So your course before for today. Thank God. Hope you understand the spike catching strategies now. Yes, RSI settings is default, so there's no settings. Just add RSI, the default settings, RSI 14. Yes, we are done for all the webinar classes. So if you have any question or any issue or any problem and you're trading, you can chat me up privately, or better still drop it in the group, in the main group, because I attend to messages in group faster than private chats, because there are a lot of messages to attend to on private chats. So my priority is the main group. I attend to messages in my groups before attending to private chats. Of course, you can. That's the normal technical analysis, the normal price action. That's the normal movement of markets. So you can apply it to any pair, whatever pair it is. Even this range break that binary just introduced. Let me show you something on range break. You can trade it normally as you trade other markets. So that means you won't. Amen. Thank you. You won't wait for for catching the spikes. Let me show you something. For example, this is the H4. See this head and shoulders on H4 on range break 100. Can see how this head and shoulders broke this neckline over here, then came back up a little bit, came down, did some zigzag here, then later sold. So you can use it on any market whatsoever. Let me check step index. This is H4. You can see double top on H4, top 1, top 2, neckline was broken here. You sell here, and you can see there was a, after this neckline was broken, there was a retest and bounce. So you sell here as a conservative trader. You can TP on this level just because of this double top. See this small double bottom here. This double bottom will be bigger on H1. Let me change back to maybe H1 or probably M30. Okay, so you can see that double bottom here on M30, though it was very small on H4, but you can see it clearly here on 30 minutes time frame. So this is the neckline. Let me draw the neckline very well. Okay, the neckline was broken here. The neckline was broken here. So there was a breakout, there was a retest, and there was a bounce. So let's look for, okay, so let's take profit here around this level. So you can see that's a good one. So thank you very much, Mr. Popjo. So can we end the class now, or you have some questions to answer to ask again? All right, sir, thank you very much. So good night. You can always rewatch the video through the link. So thank you, God bless you, bye bye. Okay, sir, thank you very much, bye bye.